Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro-dollar. An immediate countering bullish harami yesterday, in response to the previous session's bearish harami, and an overall indicator of the intraday indecision the market started to show upon approach to the first heavy-duty declining piece of resistance, and that's the middle time, currently at 106.94, of the well-highlighted January to May bearish Andrews pitchfork. This pitchfork continues to direct and show the overall bearish angle of attack of this market, as it has done now for over a year. In addition to this, we now have the declining short-medium moving average, currently 107.68, just above the market. This moving average is important, as I would only ask you to look upwards on the daily chart the last time the market approached the short-medium moving average back at the end of March, and the resultant move lower. Finally, we also have the resistances from the April 2020 low at 107.25 and the May 2020 low at 107.66, sitting nearby. Thus, all this makes for an interesting market over the next few days. Meanwhile, looking below, the next support is the 2020 low at 106.35, but the better support starts from the April 2017 low at 105.68 and extends lower thereafter. So far today, a really interesting move already up to the May 2020 low at 107.66 and a declining short-medium moving average, currently 107.68. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday, and a follow-on higher to the previous session's immediate countering bullish harami. The market is still within the free area between the congestion zone below, between 124.78 and 125.09, which contains within it the 38.2% Fibonacci line of the March 2020 to June 2021 move at 124.89, and the resistances above at 126.72 and 126.86. For reference, 126.72 is the September 2020 low. We do have the high from 3 weeks ago in the 126.35 area in between, but I'm minded not to reference that too much right now. So far today, well, a move higher up towards the resistance at 126.72, but pulled back from properly testing it. Euro sterling. An immediate countering bullish harami yesterday, if only just. It seems the market is not done yet with the pipe top stroke possible double top formed earlier this week. Just below the current levels, we have support from the following: the April 2021 low at 84.70, the broken 2021 to date downtrend currently at 84.68, that makes up the upper trend line of the extended diamond pattern, the flatlining long moving average currently 84.42, the upper trend line currently 84.14 of the smaller and more robust lopsided diamond pattern, and finally moving up and into the frame the short medium moving average currently 84.13. For the moment, we still have on the top side for the smaller lopsided diamond pattern a primary target X in the 86.80 area and a harder to get secondary target X1 in the 87.65 area. And for the extended diamond pattern, we have a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Additionally, there's also the one final pattern, and this is a big one which this market had previously triggered but then sent mixed messages on. I've spoken for weeks, months even, of the very large falling wedge pattern, currently at 84.68 to 81.59. This pattern is still in operation, but it has fallen into the shadows a little with the rising prominence of the diamond patterns. And though triggered, this pattern still leaves us with some questions. You see, it has the most ambitious upside target of all. Target X5 for this pattern is in the 88.65 area. That is a really big ask. So far today, nothing much, a dip lower and a move higher, but prices have reverted back to, well, they were back where they started, but they've moved down to the short moving average. US dollar against the Indian rupee. A bullish opening white Mariposa yesterday after the schizophrenic pattern in the previous session, and that was of an indecisive spinning top that could also be seen as a bullish harami. I hate repeating this, but it was once again well within the new congestion zone between 77.40 and 77.80. Overall prices are still in between the lower time below, currently 77.11, and the middle time above, currently at 78.57 of the mid-January to early April bullish Andrews pitchfork. We still have overhead target X in the 78.30 area. This is the potential target for the whole of the 2022 action, being a possible bullish halfway hesitation, over which the market is seemingly still trying to make up its mind about. In between there and here, we have the previously mentioned middle time and also the upper trend line, currently at 78.28 of the late August to date ascending, expanding wedge pattern. So far today, not much. A slightly move higher right now and then back down again, but we're still within yesterday's range. US dollar against the Brazilian real. A bearish black crow yesterday, and a half decent one considering the previous 2 days had been consecutive indecisive spinning tops. This actually may restart the recent move lower of 2 and a bit weeks duration. The market broke down and closed below the support of the base of the main recent ranges on the June 2020 low at 481.62, as well as, and perhaps more importantly, the 50% Fibonacci of the October 2018 to May 2020 move at 477.54. We now have below the significant congestion at 472.90 and 471.42. I suspect the continually decline of the short medium moving average, currently 486.43, may have prompted this move lower. In the bigger picture, we're still in between the upper time, currently at 508.84, and the middle time, currently 462.74, of the start of 2022 to date bearish Andrews pitchfork. This is still an early development bearish pitchfork, but it may have some merit in forming and hence showing the recent bearish angle of attack. US dollar against the Mexican peso. A bearish black crow yesterday. I suppose you could count it as a third bearish black crow if you were to reclassify the last 2 indecisive spinning tops as bearish black crows. Anyway, overall the recent top of the market is still defined by the lower trend line, or uptrend if you will, of the June to October 2021 descending triangle pattern, currently at 20.0632. But that role may soon be taken over by a descending short medium moving average, currently 20.1045. Meanwhile, we're heading towards the base of the support as the market moves down through the late March and April double bottom congestion between 2010 down to the 1971.68 area. We are now very, very, very close to the last chance support for that congestion. Now, I have recently asked the question, is the mid-April to date action a possible cat's ears pattern, bearish cat's ears pattern? Well, I think this pattern has merit, and I've placed, let's say a conservative target X below, though if this move down happens, it will probably extend even further down. This is a bit of a lopsided pattern. I've used the minimum size move possible for this pattern, thus target X is in the 1954 even area. So far today, well, a test lower, though not by much, and with a narrow range for today. I continue to think that this effort during this week is a more serious, if quieter attempt lower than earlier ones. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.